Good morning and welcome to Stock Market Today. It's Monday, September 30th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics, and you can head over to chaikinanalytics.com/today to sign up for a free email where you can get daily stock ideas for you to consider. Hits your inbox every trading day before the market opens. And today also happens to be my birthday. So I thank you all for taking some time out of your morning to spend it with me. U.S. equities finished lower in Friday's trading, though off the worst levels of the day. The S&P 500 was down for a second straight week following 3 straight weeks of gains. Treasuries were little changed with the curve steepening. The dollar was stronger versus the yen, weaker against the euro. Gold down 60 basis points. WTI crude continues to trade lower, down 90 basis points among rising trade tensions as well as demand concerns. As we get to the desk this morning, though, futures are up 40 basis points and U.S. equities rebounding a little bit after that second straight week of losses. Asian markets were mostly lower overnight with China lagging, though European markets are mostly higher today. Treasuries are weaker with the curve flattening a bit. The dollar is stronger against the euro, little changed against the yen. Gold down 80 basis points and WTI crude piling on to the downside, down another 1.2%. Now, as we look at the structure of the S&P 500 here, we see that it is continuing to hold the top of the support zone. Remember, we've been highlighting 2,900 to 2,950 as a key support area, and that was tested again, actually dipped below, slightly below the 2,950 level on Friday before closing off the worst levels of the day. Resistance is still in that area between 3,000, right, round number, resistance at the 3,000 mark, and then the July highs at 30.30. The RSI rolling over a bit, but remaining in bullish ranges. So as we've been saying, and we'll continue to say, we are looking for this support zone to hold and for the RSI to hold above the 40 mark. That would be the lower bound of bullish ranges for this indicator, and that would be a sign to us that momentum is remaining bullish and the market is likely to resolve to the upside, especially when you add to the fact that Chaikin money flow is bullish and holding steady with a bullish reading as the market kind of consolidates and tests support. So the indicators line up for support holding as the most likely outcome. And as we said, futures are trading a bit higher here today, but still some work to do around that 3,000 mark. As we dive in, what am I writing about today in my note to Chaikin Analytics members? Well, the SPY is oversold in the near term. We have an interesting way of looking at overbought and oversold, and we're going to take a look at that chart a little bit later in the show. Small caps are testing support at their moving averages, and small caps have been a lagging area of the market, and they continue to lag, but maybe some potential there for a base to start to build. Possible momentum shift in oil as well. We'll drill down on that, but I'm highlighting in my note, dollar strength could be a headwind for further gains in the crude oil and energy complex. And as we said, futures do point to a higher open here today. Now, taking a look at the power bars, remember what the power bars tell us. They tell us how many stocks in each of these indices have bullish, neutral, or bearish ranges based on our 20-factor model. We can see the Dow is skewed in favor of the bears. 5 bearish stocks to 3 bullish stocks. S&P 500 gives up 55 basis points on Friday, but still a bullish skew here. 111 bulls to 93 bears. NASDAQ underperformed on the day, largely a function of weakness in Micron following their earnings, and that weighed on the semiconductors. It's interesting to note, though, that the bearish shift in the power bars for the NASDAQ, 22 bearish stocks for 13 bullish stocks in that group. Small caps, slight underperformer again. That's been an ongoing theme, though the ratio here is bullish. 592 bulls, 363 bears. Bonds, slight uptick, sending yields lower. So according to the power bar, small cap stocks and large cap stocks are somewhat bullish, but across the board, the major markets are mixed. Drilling in now, our stock of the day. And the stock of the day is auto-generated based on our algorithm when looking at our model and the rating specifically within our model. So Zoomies comes to us from the non-food retail wholesale group. Ticker symbol ZUMZ has a very bullish Chaikin power gauge rating due to very strong earnings performance, very strong price volume activity, as well as attractive financial metrics. And when we roll up the 20 factors, 5 in each of these 4 categories, we come out with a very bullish rating. And then we see a very bullish stock is in a strong trend above the rising long-term trend line and in a strong industry group. So right away, that tells us this is the type of stock that we want to look at. And then we need to figure out, is the timing right? Does it make sense to look at the stock today? And I think it does actually. Why? Because the ribbon at the bottom of the screen tells us that rating. Green is bullish or very bullish. And then we can see the stock is outperforming relative to the market. So a very bullish stock that's outperforming the market has now become oversold based on our overbought, oversold indicator with bullish Chaikin money flow. So we can see here solid support at the $28 level. I think a name like Zoomies looks interesting on the long side of a portfolio. Take a look at Zoomies here, ZUMZ, very bullish stock outperforming the market, now oversold with bullish money flow. Drilling down on the sectors now. Every day we look at how the sectors are performing over the previous 5 days, and one theme should be clear at the top of this list, as it has been for the past week or so, is the defensive feel at the sector level, right? Staples, obviously a defensive area of the market. Utilities and real estate, safe haven, defensive area of the market. Both of those, utilities and REITs, also tend to do well when rates are falling, as they have been over the course of the past week. It's kind of interesting to see financials towards the top of the list, though, because the falling rates, in theory, should be a headwind for the financials. But remember, the financials also contain that very strong insurance industry group. Industrials, discretionary, tech, and materials are middle of the road. Energy, comms, and healthcare towards the bottom of the list. We're going to take a look at energy a little bit further. We're also going to take a look at energy as it relates to crude oil a little bit later in the show. But from a fundamental standpoint, based on our model, energy remains the weakest sector of the market. And as we drill down on some of the different industry groups within energy, we'll see that that is largely the case, because our industry in focus today, oil and gas, exploration and production services, has that bearish skew to the power bar, right? Over the past 6 months, this group has underperformed the S&P 500 by 31% plus. And we think that that underperformance is likely to continue because of the power bar ratio, right? 26 bearish or very bearish stocks, 10 bullish or very bullish stocks. The group is currently ranked number 18 of the 21 subsectors that we look at. It has moved up 1 slot over the past week, but still towards the bottom of the list, still an area of the market that we want to avoid. Some of the indicative names, all with very bearish Chaikin power gauge ratings: Noble Energy, NBL, Concho Resources, CXO, and Continental Resources, CLR. As we said, you can see here very clearly, all with very bearish power gauge ratings. And if we take a look at the fund itself, XES is the SPDR S&P Oil and Gas Exploration Production Services fund. It does have a very bearish Chaikin power gauge ETF rating, and the trend is weak as the fund is now back below a declining long-term trend line. All the while, at no point in the past 12 months has this fund been an outperformer relative to the market. So steady trend of underperformance in a clearly defined downtrend. Money flow trying to turn bullish here, and that's kind of interesting to me, but there's not enough evidence there yet, especially from a relative standpoint, that gets me excited that we've seen a bottom and seen it and are likely to see a turn here in the services portion of energy. Fund is oversold, so not necessarily an opportune time to open a bearish position, but still an area of the market that we'd like to avoid given that very bearish power gauge ETF rating. Let's move in. Let's look at what's trending now. Friday's gainers and losers, our movers and shakers on the day. Wells Fargo leads to the upside as they announced a new CEO. EMR, news that a hedge fund is building a fairly sizable stake in the company, sent that stock higher by nearly 3.5%. Ulta was an outlier in what was otherwise a weak retail tape. Ulta down, up 3.4%. No real news on Mattel to send that stock higher by 3%, and E-Trade, ETFC, rebounds 3%. Remember, on Thursday, Interactive Brokers came out and announced some commission-free trading, and that pressured some of the traditional online brokers. E-Trade was down, was on the loser side of the board on Friday morning, but a bit of a rebound here on Friday to send the stock to the leaderboard on Monday morning. Losers, Micron down 11% following their earnings announcement and guidance, and that weighed on portions of the chip industry that are levered to memory. So we see Lam down 5.25%, AMAT down over 5%. Both of those are semiconductor equipment companies that have leverage to memory. So Micron's print weighing on the group. Boston Scientific, interesting, they announced some positive data from one of their studies on Thursday, but the stock was down 4.8% on Friday. And Wells Fargo's new CEO is coming from Bank of New York. So Wells Fargo up 3.75%. Bank of New York, BK, with a neutral power gauge rating, down 4.5%. Now, they have announced an interim CEO, but that news announcement sent investors towards the exit on Friday in Bank of New York. So let's take a look at what we're talking about in the market here. When I say SPY is oversold in the near term, I am talking about our overbought, oversold indicator, which is designed to tell us whether a stock or an ETF is overbought or oversold within the context of its existing trend. Now, intermediate term trend for the SPY is certainly higher off those December lows from last year. Fund does have a bullish ETF rating, and it is now oversold as it holds above that key support level, right? We've been talking about 2,900 to 2,950 for the S&P 500. Well, for the SPY, that roughly translates into 290 to 295, and we are holding above that level, actually triggered an oversold buy signal today. It's interesting to me now we are oversold with bullish money flow as we dance with the long-term trend line and trip a buy signal. So for the broader market, as measured by SPY, if we're going to start to see a rebound here and a move back towards that resistance zone near 300, this would be the level for it to start as it holds support and becomes oversold with bullish money flow. So something to watch closely here over the course of the next couple of days to weeks, see if that oversold condition starts to resolve itself, and in particular, if it resolves itself with that key support zone holding, as we've been highlighting here for the past couple of weeks. Taking a look at small caps now via the iShares Russell 2000 ETF, we can see that IWM is testing support at the moving averages. The red line is the 50-day moving average. The blue line is the 200-day moving average, and it lines up with support at the top of the August trading range. So small caps pulling back to test support within the context of what can only be considered range-bound trading for the pretty much the entirety of 2019. We've been chopping in this range. Support down in the 145 to 150 level, solid resistance at around the 160 mark. The RSI for the IWM, very similar to SPY, holding in bullish ranges for now. And what's interesting to me is that the last couple of tests of support for the fund did not produce oversold readings for the RSI. So that could be a sign of momentum to the downside waiting. And if we can kind of hold the moving averages here and see the RSI gap back above 50, that would be an encouraging sign, especially in light of what's happening at the bottom of the chart. That's IWM relative to the SPY. You can see a steady downtrend indicating that small caps have been and continue to underperform their large cap peers. But we do have a near-term break. And if we can hold support on a relative basis as well as on an absolute basis, maybe that starts to set the stage for a shift under the surface of the market, and we start to see small caps begin to outperform. We are not there yet, but these are the signs that we would be watching to give us a clue that that relative trend is changing. Additionally, I said we could see a possible momentum shift in crude oil here. False breakout pulls back into the zone between 50 and call it $60. But notice what happened here with RSI. RSI holding middle of the range, not breaking down as price retreats. So that could be a sign of a shift from bearish momentum to bullish momentum, which would set the stage for a base to begin to build and crude to move higher. And maybe that would help break this downtrend in the energy sector on an absolute basis. Finally, we'll leave you with a stock idea, AT&T, a bullish stock in a clear uptrend. You can see the scooter line up above 90, momentum as measured by RSI above the 50 mark, above the 200-day moving average. AT&T, ticker T, looks good to me. That's going to wrap it up. Have a great day, everyone.